Good morning and welcome to OETV's Crypto Dome. We are here live and in charge with Adam Blumberg, co-founder at Interaxis. Adam, welcome back.
Yo, good to be back, Mehdi. Sorry for the week off, but good to be back here on, hey, what's becoming probably the most important 20 minutes for anyone investing in the world right now, right?
Well, let's be honest, if we can keep you under 20 minutes, that's a result in itself. So, it's the most important time of your day. That's it. Let's go with that.
Yeah.
Let's dive right in. There's so much to talk about today, as always, and we missed a week. So, let's catch up on some of these headlines. There was regulation. All right. We normally end with regulation, but let's kick off with some regulatory chat, right? Just to get things warmed up. Fed Chairman Powell was talking at an event, I believe yesterday or a couple of days ago, and he was highlighting the need of regulation in DeFi, and it had to be done carefully and thoughtfully. I'm not disagreeing with that, but then he did continue with the mantra of same risks, same regulation as in line with conventional financial systems. Now, I kind of have a little problem with that last statement. What do you think? Because I agree with the careful approach to regulation, but it's not square peg round hole time.
No, look, again, like you, I saw the headline. I like the idea of careful regulation, especially coming from someone like the Fed chair. The idea of like, we don't need to over-regulate this right now. But then he kind of went back and said, we already have the regulation, right? He basically said, we have this already. But what I feel like a lot of what he's alluding to is kind of like the SEC. Let's not allow people to lose too much money. We need to make sure that there's not a whole lot of money laundering happening with crypto wallets. And I think that's really his charge. He also says he's not quick to introduce central bank digital currencies. He's really not 100% on board with that and doesn't want to do it too quickly. So I like the kind of measured approach from the Fed chair. Not something I expected. I'm not as I've said over and over and over and probably over again on this. I'm not a big fan of taking old regulations and applying them here. But honestly, Mehdi, some of the old regulations do actually probably apply. Right? Like we have to keep things safe. We have to make sure that people aren't just willy-nilly, offering up brand new currencies and that are completely unsafe and unfounded. But we do need some space for experimentation.
Absolutely. And I think that's one of the important parts, right? We know that there is definitely going to be some crossover. We can't just throw everything out. But one of the statements he did make in referencing the crypto winter, which I found interesting, was that he said, the crypto winter had its kind of own sell-off, but traditional finance didn't necessarily go along with it. So he's already highlighting a separation between how these two asset classes behave. Then surely you can't necessarily have the same umbrella regulation to sit on top of both of them.
Exactly. And he also, I believe, highlighted in what you and I both read and listened to, that he feels like the macro markets and what's happened with federal banks or feds around the world kind of set off what happened in crypto. And it wasn't necessarily something that was only crypto, but you're right. He's kind of said there, these are kind of separate markets. And maybe because of that, they do need to be centrally governed. But I think what he's also saying is we don't need to rush to create regulation for it. Let's make sure we know what we're doing. Right. And I don't know if he said it in so many words. I mean, that's like, I think I'm reading optimistically between the lines there. But he didn't fully come out and say, we have all the regulation we need. Let's just apply it, kind of like the SEC has done. But he's also not saying we need all new regulation right now, or this is going to get out of hand. He's kind of going, take what we need. We need to keep people safe. We need to make sure we're not laundering money. There's no criminal terrorist money going through here. Let's make sure that we have that under wraps, under control from a regulation and government perspective, which, look, I agree is important. I don't want a whole lot of terrorist money or criminal money going through the DeFi system if we can help it. But what he's also saying is let's not, no knee-jerk reactions here, right? A lot of what's happened is experimentation thus far. We need to go with it a little bit, not have any knee-jerk regulation, because once you put regulation in place, it is really hard to take it back.
Absolutely. And I think, it's definitely, we're progressing in the right direction where there's more and more people talking about it in those seats. And, let's have a look at the fact that Nasdaq has now announced that they're going into the crypto world. This is obviously huge for the institutional customer base. This allows them general access in the second largest stock exchange, and it's fantastic. So obviously, not obviously, I'd like to think that these types of moves of people like Nasdaq coming to the party would help regulators, one, get more comfortable with the acceptance of crypto, and kind of not light a fire, but get them much more focused on trying to iron things out in a bit more of a timely fashion, rather than just throwing it in the air and pushing that can down the road.
Yeah, and I think look, what it does is it brings a lot of that institutional money into play, and what that tells regulators is the banks, the large institutions, Nasdaq, as we talked about last time, Fidelity, Schwab, they want to play in this world. They see it as important. And therefore, it's incumbent on the regulators to make sure that all that institutional money, all that pension money, retirement money, hedge fund, and that trickles down all the way down into retail, make sure that of course you keep it safe and secure, but that you're not cutting off innovation in the process. There's no reason for all those companies, whether it's, again, Nasdaq, Fidelity, Schwab, BlackRock, whomever, to get into this if it's going to be the exact same thing as we already have. Right? There's no reason for them to put all that money in. And you have to assume that all those companies obviously have the ear of the regulators, obviously have the ear of the legislators, and they're going to say, here's kind of the direction that maybe we think that the regulation should go. And what it does, in my world for financial advisors is it puts a big stamp of approval on it, right? When NASDAQ says, we're going to custody this, that's kind of the okay for a lot of advisors to go, well, if NASDAQ says it's okay, and they're actually putting forth the time and the effort and the money to do it, then Bitcoin and ETH at this point are probably pretty good.
Absolutely. Completely agree. And now onto a topic of, well, I guess this has been some positive, negative back and forth between you and me, NFTs. I've now come full circle, and I'm not necessarily as firm a believer, but I'm definitely into the NFT party. So, let's see where we go with this. But Disney and Apple are coming to the party as well, in different ways. But you have been, you've used Mickey Mouse as an analogy for a long time now, and suddenly Disney started listening up, and they're bringing it. So, we've got Disney dipping their toe in the NFT world. Apple is, I guess, they're just trying to cash in on this situation by being part of the access or the rails to clip their 30% coupon on NFT sales. So, two big players coming in two different ways, but this is all, again, positive stuff.
Yeah, it's pretty positive. On the Disney side, of course, the analogy I keep using for Yuga Labs, for Bored Apes, and for CryptoPunks, and the fact that if I own a Bored Ape, I own the licensing rights to that, is the equivalent of, imagine if at some point I own the rights to Mickey Mouse or Minnie Mouse or Donald Duck or one of those characters. And lo and behold, here we see Disney coming to the party. I guess they watched Cryptodome and they said, we should totally be in on that. And Disney, and when I say coming to the party, what they've said is they're hiring, I believe they're hiring lawyers, they're hiring people to help them get on board. And these are going to be Disney employees. This isn't Disney contracting with someone. This is Disney hiring people full-time on board to be NFT lawyers to help out with their metaverse, whatever they're going to do in the metaverse. But this isn't, they're just hiring some, crypto geek to come help them. This is hiring lawyers that understand this world, understand the licensing of it, understand the smart contracts and ownership and everything, to help Disney figure out how they're going to do this. And keep in mind, Disney not only owns Mickey and Minnie Mouse and Donald Duck, but they own Marvel, right? So you have all the Marvel comic book characters. They own Lucasfilm, so they own all the Star Wars characters. Can you imagine if all of a sudden they put NFTs of Boba Fett for sale, and Yoda and Baby Yoda and Iron Man? This is going to be a huge undertaking, and really exciting that Disney's getting on board.
Well, this was one of the things that I'd alluded to a couple of weeks ago, where we were talking about different people coming to the NFT party. And I always felt that if you've got existing branding power, now in this case of Disney, the successful opportunities of NFT sales is just through the roof, right? As you say, Mickey Mouse is already an incredible figure globally, right, and across multi-generations, there's no one that hasn't been exposed to Mickey Mouse. Suddenly to have an NFT tied to Mickey Mouse, like 10,000 NFTs of different Mickey Mouse outfits and all this type of stuff like they did with Bored Apes, you've now got a huge opportunity, and you've got great frothiness and excitement within the NFT world.
Yeah. And look, it's going to go so far beyond. Disney's going to take it so far beyond what we know of as NFTs, which is there's 10,000 of something and they all have different characteristics. Disney is genius at licensing. That's what they do best, right? Their stuff is on, toys, cartoons, clothes, everything. They are geniuses at licensing what they own. So to take that into the NFT world, which as you and I have talked about, is where it's going to be so important with media. And look, not just characters, movies, music, all of those things that Disney has at their disposal. They have sports stations. They have all sorts of other things that they're going to be able to utilize NFTs for. They go above and beyond a picture that I might own rights to. They're going to be able to push NFTs into licensing deals and licensing rights and copyrights and all these other things that a decentralized, transparent, immutable blockchain, which is currently the Ethereum blockchain that's most of this, is sitting on top of that. They're going to be able to push that so much farther because they've been in the licensing world for so long. And if they can marry those two and not make it kitschy and not make it a gimmick, like some of the NFTs we've seen so far, honestly, have been kind of gimmicky. Disney has the ability to push it into something that is no longer a gimmick. They can make it a real part of their business model. And that to me is tremendously exciting because they've seen where this could potentially go.
Well, yeah, you're right. We've seen the gimmicky NFTs, and that was one of the things that put me off from day one. But I'm not going to reference anyone. I'm just going to say Taco Bell. Let's have a look at FTX. Anyone who's been watching anything in crypto world has heard and been exposed to articles with FTX's Sam Bankman-Fried. He seems to be taking over the world, one company, one bankrupt company at a time, and just picking up assets for nothing. I see the last one that's conversationally he's picking up is the bankruptcy-ridden Celsius. Is there anything else he won't buy?
Well, Celsius, FTX, I believe, won the auction rights to Voyager's assets. So Voyager, the bankrupt public company from Canada, I believe FTX actually won those rights and is going to pick up the assets of Voyager. They're, going to make a play for the Celsius assets. Of course, yesterday, the CEO of Celsius actually finally stepped down. So maybe that opens the door for FTX and SBF to come in there and figure out what they can do with those assets. Look, I think Sam Bankman-Fried is really good about understanding how important the industry is and how he can help right now and how it's at this crossroads and he can really help to not have it self-destruct. And so I think I feel like, and I don't know him personally and I don't know what they're going to do, but I feel like one of the things they're going to do is try to help make things as right as they can for those that had assets in Celsius and those that had assets in Voyager, as right as they can. They're not just going to give money away, but I think there's going to be a good plan because he doesn't need, in my opinion, to have kind of an ego behind it like Alex Mashinsky did. He doesn't have to save face at all. And honestly, he doesn't have to make it fully right with him. He can just buy the assets for pennies on the dollar like he's doing and be fine with it. But I feel like he's going to try to make it as right as he can so that they don't get completely turned off by the industry.
So, Adam, you touch on it there, right? So far, a lot of what he's been doing has been massively helpful. He's almost put in a floor in some of these asset values by helping prop people up during this crypto winter. So that's great. He's done a huge amount of positivity for this asset class, for this industry, everything across the board. Now, does that bring concerns to the regulators that you've got one player that's so actively involved as a linchpin, as a kingpin almost, in all of this crypto world? Right? Does that raise red flags?
I'm sure it raises red flags. I mean, how can it not? It would be, pick your bank. It would be the equivalent of some bank just sort of buying up everybody. It's something we had years ago with telecom companies, with AT&T that had to get broken up into all the bells. So I have to imagine regulators are going to have some bit of a problem with this. But in the meantime, look, he's helping all these people out with their assets. The alternative is that people just lose their money. So he's helping out right now. And look, they have been pretty good. FTX has been pretty good with regulators. They've been pretty good with trying to abide by what the regulators say and trying to help them with their regulation. He's appeared before Congress. He's set up FTX US and played very nice with regulators. And he knows that what is offered elsewhere in the world is different than what's offered in the US. So look, I think it's a little worrisome, but I think there are worse people that could be in charge of something worrisome. Now, he could be that guy that's just laying in wait, going, at some point he's going to strike and take over all of this and make it horrible. But as we've seen right now with Sam Bankman-Fried and with FTX, he's been really good to the industry. He's been really good at working with regulators and trying to make crypto something that is accessible to so many more people, and in a safe and compliant way. And all we can do is hope that continues, because, man, the guy has a lot of money. I saw somewhere, and I haven't verified this, FTX has like $1 billion in free cash flow or something that they...
That's just in his checking account, right?
Well, of course, that's his NFT money. That's his spending money. And interestingly enough, this news didn't make what we were going to talk about, but ironically, the president of FTX US actually stepped down yesterday. So, yeah, FTX is moving their headquarters from Chicago to Miami, even though they'd already started building a building in Chicago. They're moving their headquarters to Miami, where, of course, they named the arena there. And they are, and now they're, I haven't even seen if they're looking for a new president or if there's someone going to be promoted internally. But their president stepped down, and he's going to go, onto some other project. Man, it'd be great if he went to work for the SEC or something. That'd be fantastic for all of us.
No kidding.
But I don't see that happening.
So, Adam, we've had a couple of viewer questions along the way. We've just got one today from Dave in New York. And for our viewers, feel free to send in questions anytime. There's links at the side for Q&A. We'll air as many as we can. With the predictions of a market crash, what could that mean for Bitcoin, other crypto, and NFTs? Now, we've touched on these topics. I know you don't give price predictions, but I guess he's talking about the movement of the asset class in line with traditional assets. We've kind of seen some of this with the volatility of the last several weeks. But what are your thoughts on this?
Look, it's definitely a concern, and part of that is the global macroeconomic environment is just bad. There's no other, I could use a lot of other words, but I'm just going to stick with bad right now. There's not a whole lot of good happening from an economic perspective. And it has seemed that Bitcoin and ETH and everything else, it has seemed that Bitcoin has traded kind of in line with Nasdaq, and then everything else in crypto is traded in line with Bitcoin. So if you look at it that way, if the entire market I don't know if it's going to necessarily crash that much, and I'm not an economist or anything like that. I think it's going to continue to go down further. I think we're going to still see moves like that. But I definitely see Bitcoin and ETH and everything else going down with it. People are going to they have to pay their bills, and inflation is up. They don't know where their money's going to come from. There are jobs that are going to be lost. So what do? They sell their assets.
So if we've got traditional assets selling off aggressively, there's a lot of people calling out for a massive crash in the S&P down to 2250. For our viewers who might have seen the conversation with Alpha Insights, Jeff Hughes, the other day, we have the naysayers are saying that things are going to get very bad in traditional assets. If we start seeing crypto, Bitcoin, NFTs, everything else selling off, as you alluded to, that might be the case. We've also seen analysts coming out like Willy Woo, the on-chain analyst. He's kind of highlighted some of the potential, air quote, flaws in things like Bitcoin, right? So we have Bitcoin futures contracts. And in theory, the way things are structured, technically, there could be an unlimited number of futures contracts which could be sold on Bitcoin. This kind of brings to the forefront some real worrying potential here.
Right. And what you're saying is, look, we know that there's 21 million Bitcoin that will ever be created, but you can have unlimited Bitcoin derivatives. So does that change the value of it, because you could theoretically have exposure to Bitcoin without owning Bitcoin? And does that change the value? And, honestly, I don't know. Like we can probably look to gold and go, okay, there's gold derivatives. How has that affected the price of gold? The fact that you and I can have exposure to the price of gold without ever owning a bar of it. So in my mind, you kind of have to look at something like Bitcoin in the same fashion. The difference is, of course, the odd thing that we have to look at is we look at Bitcoin and other crypto assets, but mainly Bitcoin, from the idea of there's only a certain number of them. We know exactly where they are at any one time. We know exactly how they're going to be issued, right? We know exactly how many new Bitcoin there are every year. We know where every one of them is in every wallet. The difference with Bitcoin, though, especially during this economic time and global turmoil, like it's beyond economic, right? There's all sorts of other bad stuff going on, wars and such, are people actually finding more reasons to use the network? And therefore, is that going to somewhat prop up the value? People that are going, okay, there's a war going on in my country, or my government's in shambles, or I can't trust my banks, and therefore I'm actually going to use Bitcoin for those purposes because I don't trust her. I'm going to use ETH, or I'm going to use USDC or something for those purposes. And therefore the networks are going to get used. And where does the value of the network come from? The actual usage of the network, and not just the idea of kind of speculation on the value of the token, right? And I don't know where that is. I can't tell you where that is. I think it's a unique asset in history, in that we haven't really had that before. It would be the equivalent, honestly, of if we could very easily shave off flecks of gold and use those as payment electronically around the world, but we can't do that. That's what Bitcoin does for us, right? So we have this issue where you can create derivatives to give people exposure to the price of Bitcoin, but that's not the equivalent of you and I transacting in Bitcoin.
But we did also, what we have seen in traditional equity markets as well, during some of the meme stock fluctuations and volatility, we'd seen outlandish numbers of futures contracts written on somebody's names where the underlying equity wasn't necessarily custodied with the issuers of the futures contract. So, okay, and we saw the kind of volatility and problems that brought with it.
Right.
Now, accelerate and exacerbate that on a much larger scale on something like Bitcoin. This thing could be disastrous.
I think it's a big problem. And look, I wish regulators would look that direction and go, why, we have to regulate the derivatives a little bit more to better reflect the actual value of the asset, right? Because what you alluded to there on the meme stocks is I can create options all day on GameStop, right? And it might not mean that there's some underlying GameStop stock that's actually going to change hands. Same with Bitcoin. I mean, Bitcoin futures are dollar denominated and settle in dollars. They don't settle in Bitcoin. So you don't actually have to own it to trade the futures. So I can create Bitcoin futures all day long. And all you and I are doing is gambling on the price. That's it. And you're right, and Willie Woo is right. Like, that could be a problem, and I kind of wish the regulators would look that way, because that could negatively affect the price. I think in the past it positively affect the price when there's a run up. On a run down, it could very well negatively affect the price, and if people don't understand what they're actually owning, then that's even more of a problem. And honestly, Mehdi, like, that's probably where the SEC is having an issue issuing a spot ETF. Is to say what anyone who's going to provide liquidity for a spot ETF has to have some sort of hedging capabilities using futures. And if we can't necessarily trust the value of the futures because there's no underlying asset, then what are we trading?
And how are they effectively hedging? So
exactly.
There's multiple issues around this.
Yeah, the hedging becomes a gamble.
Yeah, absolutely. Well, that's definitely some food for thought, and it gets us thinking outside of the box on some of the things that the regulators should be looking at. So, more to chew on. Adam?
More to chew on, man. Regulators are always fun, right? It seems like we talk about it way too much, but we're at that stage in the cycle. At least we're not talking about will it exist. We're talking about how will it exist, and how are people going to be able to safely and securely own it and trade it and everything.
Absolutely. And sadly, we started the conversation today with regulation and ended on regulation. We're going to kind of get some more of the fun stuff in, but it's an important topic.
We threw Mickey Mouse in the middle, so that's good.
Yeah, Mickey sandwich. Yeah. Adam, Thanks for joining me. Love chatting crypto with you.
Always good.
We'll be back next week. For financial advisors watching, don't forget, check out the links on the left-hand side to digital assets and crypto education for financial advisors. You can receive that certification to better serve your clients. Everyone else, thank you so much for watching. Good luck investing. And thank you to our friends at Open Exchange for making this magic happen live and in charge. Until next time, bye now.